Let's dive into something pretty cool today. We're going to take a close look at JPY Sentinel. It's an automated trading bot built specifically for the Asian session on cTrader. But before we get into the nitty-gritty, just think about this for a second. What if your trading strategy could just run while you're asleep? I mean, that's the whole dream of automated trading, right? And that's exactly what we're going to unpack here. Okay, so before we jump into the solution, we've got to talk about the problem. Why is manual trading just so darn hard for so many of us? Look, manual trading, it's a grind. It feels like a constant battle. And you're not just up against the markets, you're fighting your own brain. You know, the fear, the greed, all that stuff. It pushes you into making bad, impulsive calls that end up costing you. This is a huge deal for anyone trying to pass a prop firm challenge. One bad emotional decision and boom, you're out. So what's the fix? Well, you need a system, a rules-based approach that completely takes emotion out of the equation. And that, right there, is where JPY Sentinel comes in. So what is it exactly? Put simply, JPY Sentinel is a bot for cTrader that automatically trades a really straightforward but effective strategy. It looks for breakouts of the Asian session range, specifically on the USDJPY pair. And the logic behind it is just beautifully simple, and it does the same thing every single day. First, it waits for the morning range to form and figures out the high and the low. Then, at a specific time, it places two pending orders, a buy stop above the high and a sell stop below the low. As soon as one of those orders gets hit, the other one is automatically canceled, and the bot's risk management takes over right away. Simple as that. Okay, now for the part you've probably been waiting for, the numbers. Let's look at the backtest results. We're talking 6 years of data here. But before I show you the equity curves, it's super important we talk about how these tests were actually run. Because, transparency is key. These tests weren't done in a perfect fantasy world. They were run with realistic conditions. We're talking standard commissions and, this is the big one, a random variable spread to mimic what really happens during the Asian session when liquidity can be thinner. So this isn't some pie-in-the-sky backtest. It's a proper data-driven stress test. All right, first up is the prop firm's safe preset. Over 6 years, it showed a net profit of 16.4% with a max drawdown of only 9.1%. Now, this preset is all about one thing, staying safe and keeping you in the game. It's pretty much tailor-made for anyone trying to pass a prop firm challenge where drawdown is king. And here's the equity curve for it. Just look at that. It's a really nice, steady climb with very shallow dips. This is exactly the kind of consistency prop firms want to see on your record. Okay, next up is the personal account preset. With this one, we're cranking up the risk just a little bit to go for more reward. The net profit here jumps to 20.3%, but you'll notice the max drawdown also creeps up to 12.75%. It's that classic risk-reward trade-off, right? Probably a sweet spot for someone with a more moderate risk tolerance. And you can see that trade-off reflected right here in the equity curve. The slope is definitely steeper, meaning faster growth, but the ride is also a bit bumpier. So yeah, it's a bit more aggressive, but the potential for higher returns is right there. And finally, for those of you who want to really push it, we have the aggressive preset. Check this out, a net profit of 32.1%. This is where things get really interesting. The max drawdown is just a touch higher at 13.01%, so it's definitely not for the faint of heart. But if you can handle that volatility, the potential reward is huge. And, well, the equity curve really tells the story, doesn't it? It's a much more volatile ride. You see higher highs, but also some deeper pullbacks. But for traders who can stomach that, the potential for some seriously explosive growth is definitely there. Okay, now I have to put the brakes on for a second and be super clear about something. These are backtest results. They're an amazing tool for understanding how the strategy performs, but they are absolutely not a guarantee of what will happen in the future. Markets change, things evolve, and past performance is never a promise. But here's the thing. JPY Sentinel isn't just about these 3 presets. It's a really powerful, fully customizable tool that puts you in the driver's seat. So let's check out some of the key features you can play with. You really are in full control here. You can adjust the trading schedule and the time zone. You can use a day filter to say, completely skip trading on FOMC days. You can set a hard max risk cap in dollars, which is a great safety net. There's even an early exit feature to cut losses if a trade isn't working out. And for you advanced users out there, this thing is fully customizable. While it's optimized for USD/JPY, you can totally re-optimize it for any cTrader instrument you want. Think gold, other JPY pairs, you name it. And when it comes to your stop loss, you've got options. You can use a simple percentage of the entry price for a predictable risk, or you can use a dynamic stop that's based on the day's volatility. Or if you want absolute precision, you can set a fixed stop loss based on a specific dollar amount. It's all about tailoring the risk to fit your personal style. All right, let's tackle two really important topics that I know are on your minds: prop firms and news trading. How does JPY Sentinel handle these? Okay, so prop firm rules can be a total minefield, and they're always changing. So listen up. With a standard FTMO challenge, you're usually good to go with this strategy. But with a firm like the Fivers, it gets tricky. Some of their programs restrict trading around news, while others completely ban this style of entry, the two pending orders. And I need to be absolutely crystal clear here. This is a serious warning. Some prop firm programs, especially the hypergrowth and bootcamp programs from the Fivers, strictly prohibit bracket orders. That is, having a buy stop and a sell stop open at the same time. If you run this bot on one of those accounts, you could get terminated. No questions asked. So please, do your homework and read their rules before you even think about using it. So what about trading on big news days, like NFP or FOMC? Well, it's a real double-edged sword. The backtests show that these days are responsible for the biggest losses, mostly because of slippage. But they're also responsible for the biggest winning days. So you have a choice. You can use the built-in filters to just pause the bot on those days, or you can accept that higher risk for the shot at a much higher reward. It's completely up to you. So, if all this sounds interesting and you're ready to see what an automated, systematic approach can do for your trading, here's how you can get started. JPY Sentinel is available right now on the official cTrader store. Best part is there's a 7-day free trial, so you can test drive it completely risk-free on a demo account. The full license is $99. And for more content, you can check out the YouTube channel at Sentinel Algo Trading. Now, of course, a final important reminder: trading is risky. You can lose money. Please always trade responsibly. Thanks for watching.